of the mandatory requirements. So for example, the SEC in the US, when it starts to talk about environmental disclosure, they're saying that if this environmental disclosure is having a material effect on complying or failing on the environmental requirements, they need to disclose this information. If it any pending environmental legal proceedings, like for example, where they had the situation where VW was having the emissions issue, in this case, they are required by law to disclose some information about the carbon emissions. When British Petroleum had this spillage in the ocean, they need to disclose some information about the court case and the legal proceedings, because it's material is having a material impact on its financial situation or financial position. So in the SEC, really, they are not looking at a wider blanket of rules, but they're looking at a case-by-case rule, where they're saying if you have a materiality, if you have a material impact of your environmental issues, you need to disclose this information. And you put that as a mention of like 10% of your current assets, or having any monetary sanctions as an outcome of any of the legal proceedings. So it's what's taken as a case by case rather than a rule like we do the statutory audit or the statutory reporting. The other thing as well is environmental contingencies. And again, if, for example, we had some organization having some issues with the environment agencies, like, for example, they saying, okay, you have a high pollution, like one of the cases in Germany recently, that the environment agency in Germany told the company that we might be putting some penalties on you or sanctioning you because you're having some kind of high pollution to the environment in the region you're operating in. So your plant need to be more adaptable to the environment. And in this case, we might put some penalties, but it's not just about penalties, but they might ask them or obligate them to put some filters for pollution, and that may increase the cost of these organizations. That's what we call environmental contingencies. So environmental contingencies here are not just in the form of penalties or sanctions, but in the form of investments in environmental issues, which might reduce, for example, the kind of pollution the companies are having in terms of emissions. In the European Union or European Commission recommendation in 2001, they recommended and recognized the measurement of disclosure and disclosure of environmental issues in the annual reports. And it was very, very strong message to all organizations in working in countries who are members of the EU. But there were two problems. One of them is lack of explicit rules, because at the time there was no explicit rule. How you measure that, how you disclose that, how you recognize that. It's not like having a clear recognition of your income or expenditures. There were no rules at this stage. And already we had low level of voluntary disclosure, even in sectors with significant impact on environment. And I mean by voluntary disclosure here, and disclosure that are being disclosed by organizations on a voluntary basis, which over and above the required mandatory disclosures. And that was very low at the time. I mean, 2001, when this recommendation, there were two problems here. So to look at what's happening in the UK specifically, the starting point was in 1975. Not a lot of people know that in the UK, it's a long history about social responsibility. But the corporate report discussed by something called the ASSC, which is the Security Commission, or what we call the Standards Commission, was trying to develop something we call the UK Conceptual Framework for Sustainability. And in this case, they said we need to disclose 4 areas. One of them is the corporate objectives, the future perspective, the employment report, and the value-added statements. So as you can see on these 4 areas, there is nothing really about sustainability. But actually, when we look at the details of each of these 4 areas, there is some sustainability issues there. For example, corporate objectives. When you say corporate objective, it's not just about your income, or not just be about generating income, but it is about what we call the wider responsibility toward the wider community you are operating in, like how much charities you support, what you pay back for the social environment, how you make sure you engage with the whole community. That's including the government. Are you contributing to the employability rate? Are you contributing to some of the social benefits? So on, so on, so that's in terms of your objectives. And then you try, okay, if you're not doing that, are you doing that in future? That's why they put a statement about the future prospects. And then they talked about the employment report. And the employment report was for 2 reasons. One of them is to look at what we call the employability rate, because one of the things why governments or even regulators would like to have organization is to employ people. That's one of the key reasons. But the other thing as well is how you treat them. And here we started to see some of the areas around human rights. And that was the first time the UK introduced some obligations around human rights. That's how you treat your employees, something related to the pay, how much you pay, and what we call the pay gap. Something as well about the gender pay gap. Are you paying males like females? Are you giving females the same opportunities as males? So that's what we call the employment report. And finally, the value added statement. And the value added is wider than just operating and achieving income. It's more about what is the value added to the wider economy in the country you're operating in, or even internationally if you're a multinational company. And that was the first time we're seeing these areas over and above accounting, or the traditional accounting. And then we came to what we call the GRI. I'm just using the terms you might find when you're reading the literature around ESGs. GRI is one of the things I might advise you need to read about if you'd like to do research in this area, because this is one of the first important initiatives that started to pay more attention to sustainability agenda. But they looked at many dimensions. The first one, or actually 3 dimensions. The first one is economic dimension. So they looked at the financial and non-financial information, including R&D expenditure. And it's saying, no, okay, it's not just about what you achieve now, but how you invest, how you develop. And here is the first time to see the area about the financial sustainability. Financial sustainability here is saying it's a function of your R&D expenditures. So you cannot guarantee you have a financial sustainability unless you do something new. You put some kind of development, you put some kind of new ideas or initiatives. And that's what the first dimension here. The second dimension was around environmental dimension, which is, again, what's your impact of organization on air, water, land, biodiversity, and human health. And if some of you know about Europe specifically, lots of the areas were used very, very high pollutant in the past. Like, for example, in Durham, which I'm coming from, it was very popular for coal mining. Actually, most of the coal going to the whole world was coming from Durham. Actually, the highest experts was coming from Durham. So you can imagine how pollutant it was, all right? So it's very high pollution city. So at this stage, all organizations operating in the region of the north of England must disclose something about your environmental information because of the coal mining issues, and so on. So there are also other areas as well across the world having some kind of high pollutions. In Germany, for example, they were having lots of industry with very, very pollutant to the water, because most of them, they're sitting on the Rhine or some kind of rivers. So they start to focus on water treatments and so forth. So there are lots of things. Other thing like Australia, they're trying to look at maintaining forests, and actually in some areas in the US as well, the forest maintenance, and that's what we call the biodiversity. And the biodiversity came as well as a big issue, especially in Africa, due to some kind of what we call the biodiversity of animals in this case. And the other dimension is the social dimension, which is looking at human rights as a main, and this was focusing really about employees, but it went beyond that to the wider community, not just people who are directly employed by this organization, but all the people operating or involved in this country.